Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market webinar. Before we get started, please take a look at the shared disclaimer. Be aware that neither Market Chameleon, Demetri, or myself are registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, D, good morning, my buddy.
Good morning, Will. How are you?
Good. How you doing?
Good. Good morning, everyone. I'm going to share my screen here. And today, we'll continue on our conversation from yesterday. We're going to take a look at a tool that helps us analyze a stock's historical behavior. And we could give it certain conditions to reference what historical behavior we're looking for, and then we get these summary statistics to give us an idea. Well, how did this stock tend to do around this event that we specify, or date range, and that helps us evaluate potential strategies for risks and potential rewards. Helps us kind of understand the volatility or the tendency, and we could also compare it to another like product. So I think the best way to go through that is to show examples. So I'm going to go to the tool, and under stocks over here, we're going to look at this price action analysis tool. Okay, when you click on it, you come to this tool that gives you a calculator up top that you could change parameters, and then run results, and we get these summary statistics. And yesterday we went over some examples, so let's go over a couple examples today. And here we have some default settings, and then it gives you, just from the default settings, these summary statistics that we discussed yesterday. Let's change some of these parameters around, rerun it to go over once again like some of these stats, and then we'll do some different examples. So over here, you could put in the symbol that you're running it for. It's defaulted to IWM, but we could just go to, let's say, Apple. Type in Apple, change the symbol, and we have a time period here by default rolling days. But let's just say we drop it down and we want to look at Apple's, just to make it easier, let's say we wanted to look at Apple's weekly returns. So this will measure week by week. How does Apple tend to do, like from Monday to a Friday, right, over a week, or like from previous Friday's close to the next Friday's close? How does it do? Does it tend to go up? Does it tend to go down? What kind of movement do we get from one week to the next? Is it like a 1%, 2%, 10%? What kind of volatility are we talking about? On average, how does it perform from week to week? And these are important if you're trading options or any type of strategy that could involve Apple, basket, parish trade, whatever it is you'd want to know these types of questions. So let's pick weekly. Okay. Then we have to define how far back do we want to go. So here it's defaulted to 4 years. So let's leave it there. And it gives us the option, do we want to include earnings periods or not? And maybe we want to exclude earnings periods because earnings is an event that it gets repriced. So it might not be very reflective of a typical week that doesn't have this major announcement, because we know earnings, you're going to have a repricing. It's a major event. The company releases its financial statements. On top of that, it could have a conference call, talk about its prospects in the future or management discussions. So there's a major repricing going on. So let's just take that out of it. Let's just say, let's exclude earnings periods. So now we set up what we want to calculate. This is going to go back, find us the data, and we'll hit give results. So now we get these results for Apple, and we see that in the last 4 years, that if we measure just week-to-week performance, 56% of the observations, the stock was up higher, positive returns, 44% lower. What about the average? So on average, the stock increased 0.35%. And the median move, half of the observations were above this, half below was 0.3%. So on average, week to week, if we average them all out, was 0.35%. And to just put it in perspective, it's not the same thing as holding a stock, for 4 years, buying it and holding it. What this is saying is week to week, meaning that you would reset every week on every Friday to be a equal or constant notional value at risk. In other words, if the stock went up, you would sell. Let's say you wanted to risk $1,000 of Apple every week, right? That was the strategy. So when the stock went up, if you invested $1,000 and it went up, you would have to sell some stock to get it back to risking $1,000 notional. If the stock went down, well, now you'd have to buy more stock to get back to $1,000, let's say, in notional at risk. Okay, so that's how this is calculated from week to week. What about if we wanted to? So this is the average, weekly return. What about if we wanted to analyze the up moves and down moves separately? When it goes up, does it go up by a lot more on average than when it goes down, or is the volatility down, very extreme, and when it goes down, it goes by a lot? So let's take a look at those two different buckets. One, all positive moves, one, all negative moves. And let's take a look at those averages. So here on average, the up moves were 2.67%. The down moves on average were down 2.57%. So that suggests that the moves to the upside or to the downside on average, they're similar, maybe a little bit higher magnitude to the upside, but very similar there as far as magnitude of moves. What if we took the extreme moves and just compared? If we have violent moves, can it be just as violent to the upside as to the downside, or is the downside much more violent than the upside, or the vice versa? Especially you're looking at the options, and these here can help you kind of assess the potential skew, right? When we know we're looking at options, there's a skew in the options. There's a skew in the tails. Is the tail to the upside? Let's say an extreme move in Apple might be what we could see here, 10%. So in 1 week, the largest move to the upside was 10.9%. The largest move to the downside was 8.1% in our observations. So you're looking at a weekly, you're looking at, potential tails there. We could kind of get those high magnitude moves from a historical perspective. 4 years of data. Keep in mind, I also excluded earnings periods, so those are taken out. So this is quickly a way to get these summary stats, and get an idea of the historical behavior of the stock given this time frame. a 1 week time frame. If we wanted to visually look at it, this is the cumulative distribution. So if we wanted to see visually, well, what percentage of the moves over a week were above, here I'm hovering at 1.5%. So we see here it's 33% of the observations. The move was higher, more than 1.5%. If we wanted to see an extreme, what about like over here, 7%? Well, that only happened 5% of the observations. So in 1 week period, where we didn't have an earnings event, a 7% move to the upside, it happened, but it's more rare, 5% of the time. And these are buckets. Here, this is a histogram. So it shows us, where if the moves clustered around somewhere. So you could see in a weekly date, that between 0.5%, that was 9% of the moves. So those the biggest bucket, but it's only 9%. But you can see it here, you got between 2 and 2.5%, that was 7.3% of the time. Between 0 and -0.5%, that's 7.3% of the time. And here are the extreme moves, one in this bucket, then you got one in that bucket. So this gives us an idea how those returns are distributed. If we wanted to come down here and look at a table, this is a graph of this table. The positive moves in 1 week above 0. See 99 observations, 55.6% of our observations went to the upside, 44% to the downside. If we wanted to pick like a above or below, let's say 4%, 11.2% of the observations were above 4%, 10.1% of the observations below 4%. So we're getting an idea here of the potential risks, the potential magnitude of moves, how frequently those magnitude of the moves from a historical perspective were in our observations. Now, and just quickly here, this is a summary of the positive versus negative. So we see the average positive move, average negative move, a median positive move, median negative move. These are the absolute averages. This is the absolute average of all the moves. High move, low move, standard deviation of the moves. And you can see here that the standard deviation of the moves to the upside was a little bit higher than the standard deviation move to the downside, which, they're almost equal, but a little bit slower. So it could be even more volatile to the upside than downside, right? When we're thinking skew wise. And these here are the top 10 biggest negative returns and top 10 big positive returns. So we could see the date and the returns. So that 8.1% down was between September 23rd, September 30th, 2022. The biggest up move was in 2021 between December 3rd and December 10th. And so on with the rest of these 10. So I'm going to come up here, and that was a quick review, but let's say we wanted to compare that to the QQQ, right? Let's say, okay, we in the same period, we want to compare it to another stock. So I could enter it here, and let's say we do QQQ, NASDAQ 100, get results. And now we see on a relative basis how they did, and especially keep in mind, you could do options cross assets, right? We could do one volatility versus another volatility, one call versus a different call. We could do one straddle versus a different straddle. We could do whatever, as traders, we strategize and we see, well, how do the options line up versus how do the historical data line up? So let's take a look here. Apple in our observations was up 56% of the time. And if we compare that to QQQ, at that same period, that was up 57% of time, so very close. And same, and then, you know, same thing to the downside. What about the average move? So in this period, on average, Apple was up 0.35% versus QQQ 0.24%. So in this time frame, 4 years, you know, on a weekly basis, Apple outperformed the QQQ. The median move for Apple was 0.3 versus 0.25, but very, you know, close together there. What about the magnitude of the up moves versus down moves? So we could see here on average, the up moves were up 2.7% versus QQQ 2.3. The down moves 2.6% for Apple versus QQQ 2.4. So Apple was a little bit, it has more volatility, really, a little bit bigger beta, a little bit more sensitive. You could see the differences there, Apple and QQQ. What about those extreme moves? So Apple, the extreme moves was 10.9% versus QQQ 8.8. Extreme move to the downside, Apple negative 8.8 versus QQQ 7.5%. So if we're comparing, you know, just the options there, we would think that the premiums and the options in Apple would be slightly larger than the QQQ, right? If we see the QQQ larger than the Apple, well, what's up with that? You know, the data doesn't suggest that, or very close together, or very wide apart. So we could run those analytics and see if there's, you know, potential hedging or trading opportunities around those options. Keep in mind, this is looking at weekly returns. And down here, we get the table side-by-side comparison. So you can see here, Apple, QQQ, Apple, QQQ, and so forth. So what if we wanted to look at the returns, and we're really interested to see, well, if something happens historically in QQQ, how did Apple react in that same time period? Let's say I wanted to just look at positive moves in QQQ, right? So if we only looked at positive moves in QQQ, was Apple always positive in that same time period, or was it, you know, did Apple always follow up when QQQ was up, or was it more mixed, or, you know, how did Apple behave during those periods? So I could just click here, all positives, or I could use the slider, you know, to maybe make it where the QQQ was, you know, maybe did really well performed or performed really badly. Let's just take a look at all positives. So this is when QQQ was above 0 for that week. I'm going to reload the results. So we could see here that now, obviously, QQQ, we changed the calculator. They're all positives, no negatives, but we could see that most of the time, Apple was up 81% of the time, but not every time. So QQQ could be up on the week, but history shows that 19% of the time, Apple was lower. So it didn't always go up for the week where, you know, Apple didn't always go up for the week that QQQ was up on the week. The average returns here, you know, QQQ outperformed a little bit. The median returns, Apple outperformed. Average positive moves, though, for that period, Apple was higher than QQQ. And here you could see the average down moves was 1.2%, negative 1.2%. And these are the extremes. So we could even see that there was at least one observation where QQQ was up on the week, but Apple was down 3.1%. Right? We'll probably find that. I don't have that in here. Okay. Um, so that's a quick way to let me see here. Uh, compare these two types of products. What if we wanted to look at the extreme, let's say on the down move? So what happens to Apple if QQQ is down? Let's say we're comparing the tails and we want to see, well, we're worried about, a move to the downside in the NASDAQ 100, but the premiums and the tails look different from Apple to QQQ, right? Like, does a big downward move in QQQ always translate to a big downward movement in Apple, right? So let's take a look at that. I'm going to go here and let's look at QQQ when it was down more than 3%. Okay. So this is what I'm doing. You see this slider here? This is looking at historical, where QQQ, periods where QQQ was down for the week. The most extreme here was negative 7.4% to negative 3%. Okay. I'm going to change that. And now we're looking at the down moves in the market, right? Where these are in NASDAQ 100 for the week, finished down more than 3%. So what happened to Apple? Well, in those observations, in that case, Apple was down in each of those. So whenever the QQQ was down 3% or more, Apple looks like it was down on the week. On average, Apple was down 3.44% for the same period. QQQ was down 4.5. The median, it was down 3.3 versus QQQ 3.8. So on the downside, it looks like Apple outperformed the QQQ. They were both down, but QQQ was down by a bigger percentage on average on these extremes, right? So we're talking about down 3% or more. The average negative moves you could see here, 3.4 versus 4.1. And even on the very extreme, well, on the very extreme, Apple was down 6.6% versus 5.8. So this is showing us graphically what that looks like. This below 3%, the QQQ versus Apple. And this shows us the relative performance of Apple versus QQQ. So the relative performance shows us, the green shows us that even if they were both down for the period, if QQQ was down more than Apple, then Apple outperformed. If Apple was down more than QQQ, then QQQ outperformed. So the down ones showed where Apple appears down 6.6% versus QQQ 5.1%. So obviously Apple underperformed, was down more. The green ones show us where Apple overperformed. So here Apple was down 0.2% versus QQQ down 4.4%. So Apple overperformed. So if you did a pair strategy where you bought $1,000 worth of Apple, sold $1,000 worth of QQQ, so you're short $1,000 worth of QQQ, long $1,000 worth of Apple. Well, if QQQ is down 4.4%, your $1,000 is down 4.4%. So the $1,000 you're short, you've made, right? Because you shorted $1,000, now you can buy it lower by 4.4%. Versus Apple, you bought $1,000, you're down on it because you're long, but only down 0.2%. Right. So between those two strategies, the one you're short went down by more. So you're profiting more than the one you're long. So that's why this isn't outperform. So just visually, we could see when these instances occurred. Right. So we could see here the dates that these instances occurred. And we could see how often, visually, how often did it outperform or overperform? on these extreme moves to the downside. Okay, so these extreme moves to the downside in QQQ, it seems like that Apple, not every time, but over time tended to outperform the NASDAQ on these down moves. So and here we see when Apple outperforms QQQ, Apple's 64% of the time. And on average, Apple's down 2.4% versus QQQ down 4.4%, meaning that it outperformed by 1.6%. Okay. So this is the quickly the stats, and we're right up at the end, Will. So I'm going to stop right there.
Yeah, that was awesome, D. Great job as always. Everyone out there, thanks for joining. Thanks for being part of the Chameleon community. Remember to like us, follow us on YouTube, Facebook, all of our social platforms out there. Great job, D, as always.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys